Hello and welcome to this video. In this video, we're going to look at your comments that you've put on our videos over the past couple of months, and we're going to take a handful of them and answer them live on this very video. So stay tuned to see if your comment is the one that got answered. Hello, my name's Aaron Patrick. I'm a chartered accountant, certified UK trainer, and also that QuickBooks Chap on the internet. Now today's video is very straightforward. As head of accounts, what I'm going to do is I'm going to look at some of the comments that you guys have left on the videos that we've posted in the past couple of months, and we're going to answer them. And our aim is to do this exercise every couple of months or so to make sure that those comments are answered for properly. So if you would like to get your question answered, don't forget to use the comment box down here or on any of our videos, and we'll make sure we get a reply over to you. So let's dive straight into one of our first ones we want to look at. Okay, I'm looking at the videos now. Now, one of the ones we're going to go look for is the how much can you pay yourself? It's been a really popular video of ours, so let's look into this one. Hello. And on there, we've had some great comments, but the one we're going to talk about today is this one just here. So the one we're going to look at is going to be this video just here. And it says, in dropshipping business, if I'm a sole trader, I have 1k profit. What can I show my rent and car expense as expense to business? If I put funds to start business, can I withdraw without tax? And that's a great question. It's one that a lot of small businesses don't 100% know. So let's break this question down. The first bit, notice they've told us they're a sole trader. That's a big part. We need to know that bit before we can answer this question appropriately, because sole trader versus limited company, there's going to be differences. If they have 1k profit, that doesn't really give us too much indication on what's going on here. Profit itself won't have too much of a bearing on what to expect or what we should change, but it is good to know. But then we get into the crux of it. Can I show my rent and car expenses as expense to the business? Now, first of all, when it comes to rent, if you're talking about a commercial property, then of course you can. If you have commercial property, that is an allowable expense for any business. If you mean your personal rent, that's when we have some slight issues, and we've got to be careful of what we include here. Now, HMRC makes this easy for us. They have a use of home allowance, which you can apply and you'll have no issues whatsoever. So you apply the use of home allowance, go by their criteria, going through their rules, and go by what they state is an allowable expense. You'll have no issues and you can claim that no problem whatsoever. Now, if the use of home allowance doesn't seem sufficient to you, you've got to be really careful about rent. You've got to be really careful about any form of cost of your house being put towards your business. Now, there is an option out there. We can go by looking at the cost of having your house, and we can apportion it to what we'd class as business rates. So we go through and we can see how many rooms that the house has got. Divide that by the cost, how much proportion of that room is related to your business. We can go through those calculations. But bear in mind that does have some knock-on effects. First of all, you're not using the use of home allowance HMRC's given you, therefore they have every right to turn around and start pulling apart that calculation. The other part to note is the fact that you could actually taint your house going forward. What I mean by that is when you come to sell the property, there is a potential that you could incur a capital gain on there, because that element that you've decided isn't going to be for personal use and is for a business use, well, you can't use that part of that property in terms of what we call our principal property relief. Therefore, when you come to sell the house, there's a potential that you're going to have to think about actually being able to having to pay capital gains on the profit that you've earned from the buy and the sell of that particular part of the house, which could easily become something that comes far more expensive to you than it ever would have been if you'd have actually claimed it in the first place. So consider the need for it. Is it something that long-term wise, you're just going to end up paying more tax overall just for the sake of having a bit of savings here and there? Also, remember, HMRC do not like the fact that you put rent and your own personal expenditure through a business. So just be really mindful of that. The other one is car. Now, sole trader versus limited company, again, a different answer to a limited company. But as a sole trader, you do have a little bit more flexibility here. One thing you have to do though is you have to prove how much of a car or motor expense is related to the business and how much is personal. You will be required or you'll be expected to do a private proportion on that element. You can't seem to get away with putting all 100% of that car unless it really truly is a pool car or something along those lines. HMRC are going to expect you to go through and put some sort of private proportion. So what you need to be doing is looking into it and putting some form of private proportion in line so that you can then be comfortable with it and be able to put that in place. So think about recording mileage. Every time you do some business mileage, record that aspect of it. You might want to consider using mileage as well. So some of the rates are actually really quite useful. So the 45p per mile, etc. You may find that that's a better alternative than having, because you're going to have to record the journeys anyway, but you might be better off just utilizing that 45p than trying to, at the end of a year, put all your costs together and then do a proportion of what's business versus what was personal. And when it comes to the capital aspect of the vehicle as well, you will have to do a private portion on that also. So keep all that in mind. HMRC basically don't like vehicles, they don't like houses, they don't like personal costs being put through a business. So they are going to restrict you, they're going to expect to see you applying some sensible private proportion to these so that you are only claiming for what is truly the business cost and not the whole cost associated with that particular asset. If that's still confusing you, don't forget to give us a contact here at Boffix and we will definitely go through and look at it in more detail for you. Finally, that last bit, if I put fund to start my business, can I withdraw without tax? So as a sole trader, every time you put money into a business, that's classed as you putting capital introduced. And every time that you put money out of the business, that is a drawings. Both of those have no consequences whatsoever on your tax. Your tax is all going to be made up of how much you've bought and how much you've sold in a particular tax year. What you take in and out when it comes to a sole trader has no bearing whatsoever. But in that same breath though, you just need to make sure that from a cash flow point of view that you can afford to keep taking money in, taking money out without affecting the overall success of your business. So hopefully that answers your question. Right, our next video is something that I'm really excited about because it's about one of the most exciting videos we've recently done. We did a video about QuickBooks versus Xero, and we got Rachel to come along and actually give us an insight into her actually flying that Xero flag and us defending and trying to show you the QuickBooks alternative. We had a couple of great questions on this one, but the one I want to bring in is this video here. Good video, but in your video you failed to compare third-party integrations. As believe Xero has the upper hand when you come to third-party add-ons to QuickBooks and more popular in the e-commerce world. So maybe you could do a second video talking about both platform and fighting out third-party add-on, what makes it thing better for the user, and do free versus paid third-party apps as part of that. First of all, what a great suggestion, and definitely something we will be looking to revert back to, and it's something we've already been in contact with Rachel herself. But the question of that though is something that we aren't at the end of what's going to happen. So QuickBooks recently announced in their QuickBooks recent Get Connect over in America that they have big plans when it comes to third party. Now, QuickBooks themselves already have a great app ecosystem, as does Xero, and both of them have lots and lots of apps that can go through. But one of the things that you've got to be aware of is that how integrated they are. And at the moment, definitely Xero has a better integration of those apps in terms of what you can do with an app that's been integrated in Xero. But that's not the end of the story. QuickBooks is going to be catching up at this point, and I think as soon as that catch up has been made, that will be great content for the channel. So we're going to be definitely looking at it at that point to see exactly what we can do and what is going to be best for our clients and for you guys as the viewers, because we want to make sure that the best available apps out there are showcased to you. And that's where we want to take the channel going forward. Not just looking at the software that they are in the native states, but what else can you do? What other apps can you put on there and how can we bring it in? So it's a great idea and it's something we will definitely be looking at. As it stands though, when it comes to third-party integrations, you've got www.appstops.com for all of your QuickBooks needs, and Xero has it as well. Also, Don't forget our podcast that we do on a bi-weekly basis, 4 o'clock on a Tuesday. We have Ash Beeston in, who is actually an app developer and owns his own app called Net Tracker. So stay tuned to that as well, because we do talk about at length lots of different options when it comes to apps and how we can most get the best out of apps when it comes to QuickBooks. So I think with that in mind, when we've got the fact that we've got our app developer on the podcast, we've got Rachel coming back, and also we're going to be looking at it more. I think going forward, we will definitely have you covered when it comes to which app is best for you and your business. So stay tuned. And the next video I want to talk about is one of my most popular videos, which was all about how to integrate iZettle into.
So you got yourself your fancy.
And in this video, we talk about how we want to make sure that everyone's aware of how iZettle versus QuickBooks works. And we had quite a few questions coming in here. So first of all, with here we had lots of questions coming through, and especially questions regarding the fact that, well, what does happen and what do you do if there's anything wrong? Well, this is all going to come down to your integration and your integrational settings. And when it comes to that, it's all about this page just here. This is your integration page, and this is important to get your head around. This page here relates to everything you need to know about how your QuickBooks and iZettle are going to talk to one another. And I really do urge you to look at these and look at what accounts are going to be what. Now, we have had comments saying that, well, which account should I put which part to? And that is going to all depend on your own personal business. Each business is different to where they want to go to. Majority of the time, as long as you got your sales going to some form of sales account that you want to go against, you'll be absolutely fine. And then all these other ones like refund, tipping and purchases, it's just somewhere other than the sales, because you don't want to net off those particular sales. So you can create some type of expense, or you can have it go into some sort of generic account related to that. When it comes to your iZettle fees and your tax rates, that's all going to be based on your personal account. And when it comes to all the different bank accounts, well, all you want to do is make sure that you're keeping as many of the bank account transactions in the right place. And then in anything else, again, I would put to some form of generic account so you can deal with it accordingly. But you need to get comfortable with what these transactions are asking you to do and put them into them on there. And if you are having any problems, what we have found is the simple case of just disconnecting and reconnecting can be a great tool for you to utilize. Hopefully that's been really useful for you, and hopefully that's helped. We're really keen to make sure that we look at all our different comments that come through. So again, if you have got any comments on any of the questions you've seen, please make sure you put them down below and we'll make sure we get back to you. It's been a pleasure to do this video for you. My name is Aaron Patrick. Don't forget to like and subscribe to this channel. The more people we get involved, the more comments we have, the more rewarding this videos like these are going to be for you. So like, subscribe, get yourself involved, get those comments down there, and I'm sure we'll see you in the next video. Bye for now.
I told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it starts. I told him I would do it all for you, and I know you do it for me too. I can be a fighter if you want. Yeah, I can be a fighter. I can be a fighter if you want. I can be a fighter if you want. All the way that I feel, yeah, I know that it's real, 'cause I can get him out of my head. I don't care what we do, everything's feeling new. Even if we stay in bed, my heart is saying yeah, 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 yeah. You know I want him, nah, 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 nah. My heart is saying yeah, 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 yeah.
Hello and thank you for watching that video. What you may not know is this channel that you've watched this video from is part of a wider group. That wider group is called Apple Core Production, and the 3 channels that we have involved are as follows: Aaron Patrick, the QuickBooks Chap, Boffix Tax Tip. Finally, we have Apple Core Live and Geeky. All the links and everything are down below in the description, but it really means a lot to us if you can go and give a like to the other channels as well.